Hello everyone and welcome to Day Trader S&P 500. It's early Sunday morning, April 7th, 2024. This is Dale Woodson, editor of Woodson Wave Report and our YouTube channel Day Trader S&P 500. I want to show you guys something here. We'll get back to that. I'll show you guys about the triggers and targets, okay? But while Woodson Wave Report is not a trading service, and we don't offer specific trades, our newsletter subscribers are using our triggers and targets to do very well, okay? We began doing this in October of 23. That was our first trigger, and you can see some of the success that some of our subscribers have had. 89,000 in 1 month, using it to manage 401k account, spreading the word to fund managers at big institution. Okay, there's 63,000 starting with 6. Okay, here's another one averaging 92.5, a 770% increase in what he was already doing. You can see all the different things there. Okay, so suffice to say that our newsletter subscribers are doing quite well with our triggers and targets. There's one who turned 25k into 89k, into 112 and 131k. Okay, so wanted to share that with you guys so you know that while we're not a trading service, people are using our triggers and targets to make very good profits. Okay, I want to give you guys an example here. Let me we started this back in October of 2023. I'll get that in there. Okay, so there's the October 2023 low on the 27th. And on the 30th, we got our first upside trigger at 41.85. It was activated on 10:30. To date, to the high of 53.33, it's 1,136 point gain from that initial target that said it's going up. At $50 a contract in E-mini futures, that's $56,800 profit up to that 53.33 high. Our next signal was at the 48.4150 level. That was activated on January 19th. 480 point gain, 24k. Okay, the next one was on February 22nd. 256 point gain, 12,800. Okay, and the next one was on March 7th. We had another one on March 20th. You get the picture. But if you bought a contract here, then added one at the next trigger, 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 you would have 105,300 total profit from the beginning to that 53.33.50 high. It still may go higher. We're looking for a downside trigger virtually every day since the October low, but we haven't found one. Okay, it just hasn't played out. We're working on one now. We'll get to that later. But that's what we're looking at, okay? So that's how newsletter subscribers are using our triggers and targets. Keep getting triggers, keep getting higher targets, okay? You can see we've got one right there at 54.96. We'll see if that plays out or if the April 1st high was the high in that, let me see, or maybe it was, yeah, April 1st. Okay, let me get out of that and let's go to our recent monthly report, okay, where we cover, this is for our annual subscribers. The reports come out monthly and as market conditions warrant. So this was our April report, which I did yesterday on Saturday. Okay, there's our triggers and targets. Okay, every one of those on the E-mini futures right there. Okay, and let's get to, okay, here we go. We're on the S&P 500 cash weekly bar. I've got 2 or 3 different wave counts up here. You can see the dates in purple. We have the high right there at 52.64 on March 28th. Okay, but you can see there we've got the blue count. We had this expanding triangle from 2018 into the pandemic low. Okay, so we got a black and a blue count, and then we threw a purple one in there. Maybe we did that on the next on the hourly. But anyway, from that wave 4 low, the market thrust out of that triangle, as Elliott himself said it does, this expanding triangle here. We identified this near the B wave high actually, and it played out. Like I said, I love fourth waves. I learned Elliott Wave on a fourth wave by mistake or accident or by default back in 1996. Anyway, we've got a 1 up in blue, a 2 down in blue, a 3 up in blue, a 4 down in blue, and there's where 5 was a Fibonacci 1.618 of 1 at 51.89. You can see it's gone above that. We've got other targets there. I got the black wave count, which we moved to secondary, if you will, or alternate status, because I like the blue count. The blue count looks better than this WX and this Y way up here. But anyway, in that black count with an A wave down and a B wave up and a WXY, you can see the B wave. If it's going to be an expanded flat or an inverted flat, the B wave usually takes a 1.272 or a 1.414 multiple, and you can see where those targets are there. And right now, the S&P is sitting between those two targets. So we haven't eliminated the black count. The blue count just looks better. It has a better look to it. So we'll see how that plays out. But that's the cash, S&P cash weekly chart there. Okay. So, and here we go with all the verbiage here. There's the high sitting in between the 1.272, and then we have a 53. That should be a 1.414. My bad. 1.414. My apologies. Okay, and the high rests in between those. Okay, and then here's what I was saying. I like the blue count. I started liking it over a month ago. It just looks better. So we moved it up to primary status in the March monthly report, okay? And as we say, it has a better look. Okay, and then I figured, what is the most bullish wave count? Because this thing keeps going up and up and up and up, okay, since October. So here is an hourly bar looking at that October 2022 low. And there's the one and ABC inverted flat. One may be here, but it's not relevant now. We've got a 1, 2, and then 3 subdivides or extends. There's 1 of 3 up here in August of 23. There's 2. There's 3. 4 stayed above the wave 1 high, and there's the 5 target at 54.80. Okay, and there's where we are with the S&P cash. You can see all these gaps here. If we get that if that A up is in play with the B higher inverted flat, that C down will erase all of these open gaps. Okay, if it is the 1, 2, and then 3, then wave 4 would come down above this wave 1 high, and it could virtually wipe out all those gaps, even in a 4th wave. That's a 3 with a parentheses around it. Okay, so that's the most bullish wave count that I could come up with an extended wave 3 in parentheses. Okay, here we go. Let's see what else we had here. Oh, here's the hourly looking at the Fibonacci time spiral going from the December 28, 2023 high. And this is starting to play out like the very first time spiral I did, or one of the first, back in 1999, which called virtually every turning point high for 7 years into the 2006 high. I don't have it here, but I've shown it before, where the August 24th, I still remember the day to this day, August 24th, 1999, I called it the orthodox high. I still do, even though in January of the next year it made a higher high. The market turned on those Fibonacci turn dates from the orthodox high, which was not the print high. Orthodox high in August of 99, print high January of 2000. Anyway, this is doing the same thing, not nearly as long, not 6 years, but so far so good. You can see these turn dates here, high and low, and it's the check marks are where the turn dates are. And then this last one was 326, which marked this little 4 here. That was 326, and then we've got that high 2 days later. So it's a slippage of either none if it hit the 26th, or 2 days. You can see the slippage here is virtually nothing. Okay, I don't know if I can yeah, we can make that bigger so you guys can see that a little bit better. There we go. Okay, there's that chart there. Okay, So, and there's the time spiral there, with the next one being May the 20th. Either it hit the low right on with no slippage, or it hit the high with 2 days of slippage. Call it how you want, okay? And I think this is all the verbiage here. You know, if the market continues on this upward path since the October low, we might expect the May 20th turn date to mark high, okay? We're gonna monitor that on our short-term wave counts, which we do for the monthly subscribers, which we had all those triggers and targets, okay? Here is the NASDAQ daily bar. Again, this is a blue count. We could extend this third wave like we did, but I just wanted to illustrate that on the S&P with the most bullish wave count I could come up with. And this one shows the blue here, which is a 1 up, a 2 down, a 3 up, a 4 down, and you see the 5 right there. Okay, we got different targets. 16,905 looks like a couple different Fibonacci's, and then we've got the actual high is 16,393 on March 21. And then we also have the black wave count, which shows an expanded flat with an A down and a B up. You can see that B wave target right there. The first one is 1.272. We'll have to worry about the 1.414 after it gets to the 1.272, if it ever does. Okay, so again, we've got the 2 wave counts there. That is the NASDAQ. There's the triggers and targets. Okay, we got that there. And then that's just all the verbiage there. Here we are with the Dow. With the Dow, we drew a line connecting. Let me see if I can get that into focus here a little better. One more little click down. There we go. There we go. From that October low, which is A in the black and B in the black up here. And then we've got the blue count, where we've got a 1 and a 2 and a 3 up here. Okay, you can see so far the high is 39,889 on March 21. Notice that, you know, we drew a line connecting the lows here and did a parallel line connecting from the A wave high. And you can see right here the Dow peaked its head above that trend line and then went down, then peaked its head again and then gapped down. So we got that resistance becomes support, or in this case support becomes resistance. Okay, so we'll see how that plays out, but that's pretty close. And it's interesting that we're nearing the 4,000 level, because that's a century mark, if you will. And the Dow has a long history of having trouble with these century marks. Okay, I think I get into that here on this report. Yeah, here we go right here. See if I can get that all in on one. Let me mark that back down a little bit. There we go. Bear with me. Okay, so the 1,000 level was achieved in January of I was using a monthly chart, so I don't have the exact date. 1966. It took 16 years to re-achieve or surpass that century mark, in this case 1,000. You can see 10,000 was achieved in 1999, and it was surpassed again in 2010, 11 years later. The 20,000 mark was achieved in 2017, and it was surpassed again in the year 2020, 3 years. And then the 30,000 was achieved in 2020, and it was surpassed again in October of 2022 after falling to 2,800. That was that expanding triangle, which actually started in 2018. Okay, but you can see it has trouble. Now here we are at the 40,000 level. Okay, and it's having trouble. I wouldn't be surprised if it peaked its little head above 40,000 and then began a multi-year decline. That's historically what the Dow has done on these century marks. Okay, bond market here, my favorite. Maybe it's been my favorite for years, but no one was talking about it until the last few years. But we were talking about it way back. I can show you on the actual chart. Okay, but we had a trigger that was activated. Okay, this was an A down from that high. You can see we had triggers here, triggers everywhere, and targets and direct hits all over the place. But anyway, from that wave 2 low, let me back up. This wave 1 high is from the 2020 low to the 2022 high. Then we had a 2 down, and this is 1 of 3 with a circle around it. This is 2 of 3 with a circle around it. We're looking at 3 of 3 at this degree of trend with a circle, and we're looking at wave 3 with the Roman numerals. There's 1 Roman numeral at October 2022. There's 2 Roman numeral at April 2023. There's where 3 equals 1 at 7.255. That's the highest degree of trend. We've got a lower degree of trend with the circle, and we've got even lower degree of trend, this one here, okay? And that A wave low was our trigger, and it hit it, okay? Let me, I'll go to the chart on that, but I'll show you guys support here is the 3.783 wave 2 low, which is right here, okay? And then our targets are there, and so far we've achieved the 1272, the 1414, and the 1618 is just above, as you can see right here, the 4.484. Once we get there, we should see a little correction, but again, we have another upside trigger up here, which will activate this target here. So our targets are 4.484 at the smallest degree of trend. Then we have a 5.551 at the next highest degree of trend. Then we have a 7.255% minimum at the next higher degree of trend. And you can see the bond market's my favorite because, as you can see, our targets, triggers and targets here, just direct hit after direct hit after direct hit, on the way up, on the way down, doesn't matter. Okay, there's our future targets, triggers and targets, which I was telling you guys about at 3 different degrees of trend. There they are right there, wave 3 with a circle, and the Roman numeral wave 3. Okay, so there's all of that, and let's just get into that bond market if we can. There's the gold. Let's get into the US 10-year. Let's do this and let's do this, and I can show you guys a little more precise what I was alluding to. This wave 1 high goes all the way back to the pandemic low, okay, March of 2020. And that, in interest rates, that was a 39-year bear market from the 1981 high, which that was a 30-year, hard to compare, but it was 18%. So when the interest rates went down for almost 40 years up to the March of 2020 low. So this, I believe, is the beginning of 39 years up. So we're only 3 years in, maybe 4. Okay, so anyway, we've had one up right there, and I'll make this a little bit, okay, that gives you the longer term perspective, and then we can get into this here from this 2 down. Okay, we've got the one up with a circle on it. There was our trigger here. There was our target, 5.1. Actual was 5.021. All right, then we had a decline here. I believe that was near a 786. And then we've got a 1, 2, and there's our wave 3 targets there. Okay, there is the most recent high at 4.429%. That was on April 3rd, right there. Okay, and you can see our targets there. So we're looking at a 1, 2, and then a 1, 2. Okay, and there's the 3s. And once this goes up, this could go higher than the 1.618. We'll see how it plays. But there's our make or break. As we always say, we want to ask ourselves, where is this wave count wrong? When we make wave counts, when we make trades, that's where it's wrong. A move below this 3.783% means this is wrong. Okay, and this 2 is going further, but it can't go below this low. Okay, so beauty of Elliott Wave, we always know where we're wrong trading and when we do charts. I want to show you guys more near term here. If we can get into, let's just shoot to the market close on Friday. Get you guys caught up. Okay, there's our time spiral. I'm sorry, the wave table of the time spiral. Okay, and here's our triggers and targets again. You can see all those profits if you bought when we had a trigger. Still looking for that downside trigger. We'll get to that to the bottom of this, okay? Here's the E-mini futures on an hourly bar, you can see here we've got a downside trigger. We're waiting for it to be activated. It hasn't yet. We got one here, okay, and that gave us these wave 3 targets here. But again, where is this wrong? Well, we've got a 1 down in parentheses, a 2 up, and it looks like a 1 down, and there's where we're looking for a 2 up, and by golly, we got it in between the 618 and the 786 retrace. If this goes above 5308.50, then this 1 down is wrong, and these 3 down further lower targets will not be achieved. We'll likely see higher highs. Okay, so we're always looking for a change in trend to the downside, but again, I reiterate, we haven't seen one yet. This looks promising, but we'll have to see it play out. There's a few more steps which we have in this to show you guys, but on the bigger degree of trend, a move below this wave 4 low would wipe out this entire 5-wave advance, which would be a huge indication of a change in trend. Okay, there's love 4th waves. There's an obvious 4th wave triangle there, and we had a 1 down, 1 up, 2 down, 3 down. I'm sorry, 3 up, 4 down, and a 5 there. You can see the 5 in red. You can see the internal wave count there. So we'll see if 53.33.50 is the all-time high or not. Okay, let me get into that other verbiage there. There's that downside trigger. There's that first low achieved. Again, that all depends on the internal wave count of wave 3. This is 1 in parentheses down. This is 2 up. So if wave 3 is extending or subdividing, there's 1 down, 2 up, 786. Between that and the 618, then we need to see a 3 down below this wave 1 low to see that play out. Okay, we have all those targets there for a larger wave 3. Okay, that there's that trigger there. Okay, there's the wave 2 up targets, which we just showed you, and that again is sitting between the 618 and the 786. You know, the black arrow pointing up said it was going up, then it would go down, so we had the wave 2 up, and we should look for the wave 3 down. Okay, wave 2 holds that high, 5308.50. Again, move below the 5190.50, 91.50 indicates that wave 2 up is complete, and wave 3 of 3 down is in play. Okay, here we are here, 5191.50. Okay, we got 1 down, 2 up, 1 down, 2 up, has to hold below 5308. Then 3 down has to go below 5191.50 to be right. Okay, where are we right? All right, where are we wrong? A move above 5308.50. Where are we right? A move below. And that is on a change in trend, which is yet to be fully confirmed. Change in trend at this degree of trend, change in trend at this degree. So there's the key levels there. 5191, 5060. That's how and we'll start. By the way, on those triggers and targets, the last upside trigger should fail. We'll see. And then we'll start our downside triggers and targets, okay? This is the initial one, which has not created a definite confirmation of a change in trend. This is definite. Okay, here we go. Let's see what else we had here. There's the bigger change in trend. Okay, here's the steps needed. Okay, we need to see 5 waves down. Okay, so far so good. We've been down this road before and they failed because there's many steps. There's 3 initial steps and then 2 more. Okay, so the initial is that one right there, 52.35. Okay, the next signal we're looking for is, get there, 3 waves up to a lower high. That's wave 2. Okay, show you guys here. There's wave 2. Okay, and the next we need is 5 waves down to a lower wave 3. It's in progress, but it needs a break below that 5191. That's assuming we're going to see a 535. There's a lot of different patterns that could still develop in a change in trend to a bear market. But we're going with this one for now. We'll keep examining the internal wave counts, these lower degrees of trend in 1 to 10 minute charts, which should do to the monthly subscribers, give those to them. Okay, so that's what we're looking for. And then we've been here before where we get all these, okay, which makes wave 3 down. Once 3 down is complete, then we need to see a wave 4 high that remains below the wave 1 low, and we can extrapolate that out. We'd be looking at 3 down to one of these targets, and then 4 up to below this, and then a 5 down with the parentheses. Excuse me. So that's what we're looking at. It's so far so good, but all we have is what, 5, 6 upside triggers since the October low, and failed a reversal trend counts. Okay, but we keep them out there so we know exactly where we're right and where we're wrong. Okay, if this is a change in trend, it'll go below 51.91. If it's not, it'll go above 53.0850. So that's where we are. But we'll see if that wave 2 this week hits that 786, or this thing blows below the 51.91 in a third wave. And on that note, if this is wave 1 down in parentheses, and this is 2 up, and this is wave 1 here, and this is 2 up, this would be a third of third wave at 2 degrees of trend. It should accelerate, should see gaps, and we should see huge volume and all that. But again, we've been here before. It hasn't played out, and I want to, do I have that in here on, yeah. I just leave this in every day on our daily reports, and sometimes we get more than one a day, but it bears reiterating. Okay, we continue to look at the smallest degree 1 to 10 minute charts of wave counts for the initial sign of a change in trend, a downside trigger. Until we see that signal, the trend remains up. The move down from the 53.30, I think it was 33.50 high, is most promising yet. Okay, we'll continue to watch and continue to report with our monthly subscribers, which we put out reports every day, sometimes more than one a day. But until we get that confirmation, the trend remains up. Okay, and first confirmation once again is a move below 51.91, which will make this wave count valid. The next one is 50.60, which will make this wave count valid and wipe out that 5 waves up. Okay, sorry for the long-windedness, but we wanted to get you guys caught up and show you the bigger picture and all the other Dow and NASDAQ and everything else too. So we'll see what this week brings, and we'll leave you guys with, let's see, I didn't even show you guys the other charts here, did I? There was the US10yr, but we'll leave you guys with that one there. Okay, we'll see how that plays out. 1, 2, 3, 4, 5. We're going to go to 5,400, or is that 53.33.50? We'll see. Okay, until next time, take care, everyone.